Hey everyone, how's it going? This is Richard, and welcome back to another stock market outlook video sponsored by MarketSmith. Let's dive right in and take a look at the major indexes, starting with the Nasdaq Composite. You can see we're clearly in a downtrend below a declining 21 EMA, 50 SMA, as well as the 200 SMA. But what remains to be seen is, are we oversold enough for some type of rally? Right now, there's no indication of a rally, and you don't want to predict and just buy and hope because from these levels, we could easily get a quick flush. But if we do see something like that occur, we have to be ready as well. We're a little bit late in the game if you want to put on some additional shorts. Probably the most recent ideal spot was this day right here. And most likely that Fed announcement day was the optimal spot, as well as earlier on in this short-term downtrend. But we are at a key level, which is something to be aware of. You can see we just barely undercut these lows on the Nasdaq Composite. And basically all of the major indexes are quite similar to this. So that's pretty much it from a daily perspective. We're just below all those key moving averages. And let's take a look at the weekly chart just to get that perspective as well. We've got kind of one leg down here, maybe, two shorter ones. This could be the third leg down, but you got to keep an open mind. And this is also a key spot I'm watching, as well as the 10,000 level. Going over to a monthly chart, you can take a look at the 2008 correction. Let's actually zoom out here a little bit. You can see the 2000 correction, 2008, and then this is the most significant since those two events. So yeah, right now it just looks like the early innings. If this is kind of symmetrical, this could last quite a while, and we could easily go further down from here. We're just barely undercutting these lows here on the monthly chart, and definitely a negative look. So we'll have to see what happens. Obviously, the Fed isn't really supporting things as of this moment, and there's no sign just yet of kind of a narrative shift from their end. Going back over to a daily chart, let's take a look at now the S&P 500. This looks very similar, a little bit weaker. You can see we've undercut that a little bit to a greater extent here, and we're below all the key moving averages. Same story here. Looking at the IWM, which is the Russell 2000 ETF, you can see that we're actually holding above. So it's interesting that the small caps are being supported a little bit better, but we're still below all those key moving averages. And this is in a more serious stage 4 downtrend below all the key moving averages. Taking a look at ARK, it is interesting that there's kind of a divergence here. We're holding above these lows. So these names are holding up a little bit better, but they've also got absolutely smashed. And many of these names within this index are in serious stage 4 downtrends and have a lot of overheads applied to deal with, even if they do manage to do some type of short-term rally. Moving on, let's take a look at the IWO, this Russell 2000 Growth Index in particular, and this is holding up a little bit better. And just in general, there are some leaders holding these lows, and those are the names that you want to be focused on and making your relative strength list. But given that we are in a correction, we're not going to say with any certainty that those will be the leaders going forward, but you do want to track that day to day, because that's how you'll basically stay on top of the names that could be the next leaders if we finally do get a new uptrend. But it's nice to see that these are holding above these lows here, but we're below all the key moving averages as of this moment. Lastly, taking a look at the FFTY, you can see that this is in a significant downtrend, very negative chart below all the key moving averages and well below these lows right here. So in terms of the major indexes, we're just simply in a downtrend on most timeframes, and we are pretty oversold as of this moment. So we have to be ready for some significant kind of counter trend rallies that can be quite vicious and basically shake out all those shorts. So we'll just have to wait and see what happens. We don't need to predict. All we have to do is basically take it day by day and manage risk along the way. With that said, there are some groups that are holding up better than most. Basically, biotech in particular, there's definitely a few names standing out here. Vertex, kind of on the bigger cap side, you can see is holding up above its moving averages, got back above the 50 SMA, is acting quite well. SWAV, medical devices, I believe, medical systems here, retook that 50 SMA a little bit sharp here. So I'd love to see some consolidation here, tighten up. And I'll go through many more names later on today in another video. But just quickly, biotech and kind of medical equipment and medical healthcare related stocks are holding up better than most. Also, solar has been holding up well. FSLR is probably the best looking chart here. But if it does undercut this 21 EMA, I could easily see it coming back down to 120, retest that 50 SMA, as well as this significant level. And going over to a weekly chart, you can see that 120 also lines up pretty close to this prior high. So it's pretty impressive that's holding up this well. But if it loses last week's low, definitely could easily fall here and still be acting quite well, given that we are in a bear market. Other than that, ENPH is definitely a lot weaker. You can see it kind of failed this level, failed the 21 EMA, pulled back, undercuts 50 SMA, and is right against base lows. This could be a short through this level if we do see continued weakness. We've also got CSIQ, Canadian Solar, a little bit weaker, Airy, weaker. So FSLR is definitely holding up better than most. And just taking a look at the tan chart in general, this got hit pretty hard, undercuts 50 SMA, is right now right up against the 200 SMA. So FSLR is the only name really to the upside that I'll be focused on. But you know, it's holding up extremely strong, and you got to pay attention to that type of relative strength. Lastly, the oil and gas names have had a little bit of a resurgence, and basically energy in general. We've got DEN that's acting quite well. Sharp increase here back through 50 SMA on a pickup in volume. A little bit short-term extended, so I'd love to see some consolidation, contraction, and then basically having it form a pivot that you can basically manage risk against that higher low. Going over to a weekly chart, you can see the base that it has been forming. Try to break out, got pushed down by the market, but is basically holding that 40-week moving average, and a really nice bar here last week, especially considering what the market was doing. BTU, also a name that's acting pretty well. Nice bar as well last week, and forming a short-term consolidation. So maybe just one more day, inside day, and then you could buy a pivot here. But if it does kind of lose these 2 days, I could easily see it revisiting that 50 SMA or even that 200 SMA pretty quickly. So you got to be nimble here. It's not really a time to be putting on so much risk. And, you know, basically just bringing back up an index, the QQQ. We're in a bear market. We're oversold, but that doesn't mean that we have to bounce. It just means that we're in a pretty significant downtrend. So make sure you're managing risk and stay nimble. Let me know your thoughts on this market down below in the comment section. I'd love to hear what you think. And if you did enjoy this analysis, please go ahead and leave a like down below. It just takes a few seconds, helps me out immensely. And of course, subscribe if you want to see more videos just like this one every single week. And with that, thanks again for watching, and I'll see you guys in future videos. Take care.